What's going on, guys? I wanted to make a little video here because today has opened up and was a little bit choppy, right? So how do we kind of navigate choppier markets, especially in the current cycle that we've been in here, where markets have been up as much as 600 points, down 500 points, and you're getting 100-point range candles. Now the ranges of the 5-minute candles are still very, very significant. I could just pick off some of these big candles that we've had here. 116 points in a single 5-minute candle, 75 points, 66 points, 71 points. What point am I trying to make by informing everyone that these ranges are big? Is that stop losses are going to be very, very hard to set, because typically a lot of times as a trader, as a scalper, you're looking for 10, 20, 25, 30 points. You're looking for some type of trend. You're looking for some type of, big bounce. But where do we put the stop loss, right? So even if you're using like a previous 5-minute candle as a stop, you're talking of upwards of over 50, 60, 70, even 100 points worth of risk. Now, if you're trading mini contracts on a prop firm, it's almost damn near impossible to kind of get that going, right? Because you just don't have the drawdown that's going to allot that kind of risk. So then you kind of get into the scenario of, well, maybe if I put $100 stop loss or a hard, max pain of $400 or $300, the problem with that is that they're running your stop, right? And the move is still going in the direction you wanted it to go. So extremely difficult. What can you realistically do? What you can realistically do is trade micros. Yes, to the profit side, you're not going to make as much money. Okay, I understand that. But until the market gets back to a more kind of organized range where, we're getting ranges on a 5-minute candle that are anywhere between 20 and 35 points, 20 and 40 points, something a little bit more manageable. This is what needs to be done, okay? It's not, oh, well, maybe you should be doing it. It absolutely needs to be done, okay? What can you do if you are stubborn and you're hard-headed and you insist on trading mini contracts, okay? You better be right. You better be right. And again, with trading, because this is a game of probabilities, we never are for certain that we're going to be right. Okay. So if you're wrong and you go down $200, $300, $400, $500 on a single trade, you absolutely need to have the self-control to get your butt up off of the seat that you're sitting on and leave. Unplug the computer, go for a walk, do something else. Go to your 9 to 5, go hang out with the wife and kids, go hang out with the husband and kids, hell, go hang out with the dog, go do something else. Because if you don't have that self-control, you will lose accounts. You're going to lose accounts. You're going to blow up accounts if that happens. If you insist on trading mini contracts in this market environment, I'm not saying that you can't do it. Okay. You can 100% do it. But the way you have to manage yourself and manage your account during this time needs to be at a level that most people cannot operate on. Okay. And that level is, well, if you win one trade and you make $100, $200, $300, you got to stop. You got to stop, because guess what? That losing trade's always around the corner. And if that losing trade is always around the corner and you're already in the green, $200, $300, and the next trade's a loser, you could potentially not only give all of that away, but you could potentially lose an account. You could potentially go down thousands of dollars, $1,000. Okay. So if you're going to insist on trading minis, you better have self-control like no other. Okay. And if you don't, you better be on the micro side. And if you're on the micro side, that's going to give you a little bit more room to play with. Even in this market with 40, 50, 60 point ranges, 100-point ranges, I would feel comfortable trading no more than 2 or 3 micros. Okay. No more than 2 or 3 micros. And if we're going to look for 20, 25 points, depending on, what setup you're taking, even if you're looking for 5 or 10 points and you take 3 micro contracts. So you're going to make $15 a contract. You're going to make 45, 50 bucks a trade. That's a little bit more manageable until we figure out what the hell's going on here. Now, this market started off extremely choppy. So if you were looking to play the breakout, you're looking to play the breakdown, it wasn't giving it it wasn't giving it to you in the first 30 minutes, the first hour, right? We got a little bit of a, 14, 15, 16 point opening range breakdown to the downside on the 30-minute opening range, which paid if you had a hard 5 or 10 point take profit. But if you were looking for more, you more than likely got stopped out. We had a few times where we were testing the upper range and it would get up there and it would reverse. It would get up there and it would reverse. So this is great for scalpers who trade ranges. But if you don't trade ranges, you're kind of looking, popping your head out of the water like a fish that can't breathe, right? So again, we're barely starting to get a little bit of a breakdown here. And on this chart, I want you guys to notice we've broken down now through and confirmed the lows of the 30-minute opening range break. We are trading below our 20-period moving average, but we're holding a 5-minute 200. Okay, so the 200 support is holding right now. I would look for any type of bounce, any type of back test. It has a potential to get up to 18,450, 460. But if we start to confirm the lows, because the market, mind you guys, is still trading 195 points to the upside. We're still up 1%. We got a lot of room down. Remember, the sellers are still in control of this daily chart. We're still trading well below the 50-day moving average. We're still trading below a lot of these upper supply zones. So again, the sellers are still there. They haven't gone anywhere. You got to be mindful. Now, the 1-2 day dead cat bounce that we had gives everyone the impression that, hey, that's the bottom. We came into that daily 200-day moving average, and then the end of the run is here. Guys, we're consistently kind of selling off. Like it's a little bit of a slower roll. Now, again, when you do get those dead cat bounces where the day is going higher, even though we're underneath supply, it makes those up days a little bit more hard to trust, just due to the fact that the market's been pulling back so much. But if we do start to lose the low of day today, 18,341, that would be confirming the loss of the 5-minute 200-day moving average. It'd be confirming the loss here. We can actually watch this play out while I'm recording this video here to see what that first move gives. So new low of day is broken here. That low was 18,341. And on the initial breakdown, we get lows of 18,329. So guys, if you're a scalper, okay, and you have a hard ATM strategy for 5 points, 10 points take profits, guess what happens? We just broke low of day and you got paid 5 points, you got paid 10 points, and we're still pushing down. This candle is now pushing down to 18,315. Okay, so 315. So notice we're down 25, 30 points in a matter of 30 seconds, 60 seconds. How long has it been since this candle started to break down, right? So if you are scalping these high of day, low of day breaks, better make sure you have a hard take profit, because what's going to happen is a lot of traders look at this move and they say, oh wow, we just put in a new low of day, it's time to get short. So you start to click the short button here, and guess what happens? It goes on a 20, 30 point bounce. Right, so just even notice this one candle that broke the lows. It went down 20, 25, 30 points. And then now the low price was 18,293. It is snapped back up to 300, 305. So a 15-point bounce on someone who gets in a little bit late to the party can be detrimental, okay? Pushing lows yet again. 18,280. I need to stop recording this video because I have people in Evolution Traders who are trading. I need to check on those traders, see what we're doing. And I've also got some positions on the table here on my options, right? So I went to the short side here on Tesla. I've got to get out of this trade here. So I'm going to end this video here. I'm going to lock in some gains. Again, guys, like, comment, and subscribe. Also, if you're looking for a prop firm, you're looking to add more accounts, because we should always be reinvesting back into our business, meaning constantly taking evaluation accounts, constantly getting better, constantly adding more funded accounts. Check out Apex. That link's down in the description box below. They allow you to have up to 20 prop firm accounts. Again, even if you're making it withdrawals of $1,000 a month. Guys, how many times in your prop trading career have you made $1,000 in a day or $1,000 in a week? I'm telling you, don't put so much pressure on yourself. Try to make $1,000 in a month. Okay, we've got 22 some odd trading days in a month. You get 22, 23, 24 opportunities to make just $1,000. If we can do that times 10 accounts, guys, we could potentially be making $10,000 a month. Think about how much that would change your lives. Make sure to constantly be adding those evaluation accounts. I'll see all of you guys on the next one.